Good morning and thanks so much for tuning into the trade setup. I'm Niraj Shah. Let's take stock of what's happening around the world. Unfortunately, I must tell you, scene is not looking very pretty for risk assets. First, um, the global news flow, the US existing home sales sink to the lowest level since 2010. People are not refinancing, and obviously so. Jerome Powell says that the yield rise could mean less need to hike rates. The problem is not now further hikes, and that is a problem, yes. But the bigger problem is the higher for longer trajectory, which I think remains status quo. The 10-year Treasury yield hovers near the 16-year highs post Fedspeak, and Brent oil overnight had topped $93 per barrel, even as the Venezuela sanctions have eased, and therein lies the problem. Now, viewers, remember, U.S. markets came off quite a bit in trade yesterday, and the futures are also looking wobbly. So, therefore, there is virtually no respite from the global cues. Asia started off very weak. Most of the early risers were in the red the last time that I saw them. The other cues and the 10-year yield is the principal culprit at 4.97 out there. But look at VIX is now above 70. The dollar index stays about 106. So the cues aren't the most positive, independent of what the gift nifty is doing. And I said that yesterday as well, that the gift nifty may have been showing a flattish start, but I think we'll have a weak day. And I think that is the same kind of aspect that we have today as well. It's not looking a very pretty picture, mind you. There's nothing out there on the results front from the heavyweights which makes you believe that, oh, things will certainly change because Indian companies and heavyweights are delivering some fabulous results. That ain't happening either. So there is a problem at our hand. What's the trade setup therefore for the day looking like? It's trading near the 50-day SMA, the Nifty that is, and therefore the day's trade is important. A lot of experts sometimes give very high importance to simple cues, and the 50-day SMA, if we trade below that and sustainably so, then it opens up some more downside. So therein is one problem. There are multiple negative catalysts for the market per se currently. I mean, think of it, viewers. There is high crude prices, there is higher yields, global markets are looking wobbly. Growth isn't rip roaring, though India is an oasis, and maybe growth revised gets revised upwards in India, US, maybe even China for that matter, because the data was looking strong. But per se, there are concerns around global growth as well. Bunch of negative catalysts. It's just very difficult to make a case for a very sharp pullback. Strange things can happen, but for now it doesn't look that way. And the flows isn't the most positive either. Banking stocks, though, while there might be a bit of a weaker start, if you will, but I think post that we might actually stay sideways because tomorrow is a really big day for earnings from a banking perspective. So let's look at the results piece both today and tomorrow and what is coming up today. So today is not a very big day per se. Yes, there is JSW Steel from the index, but then the touch of non-index names. I mean, there's JSW Energy, there is Paytm or 197, some NBFCs like L&T Finance Holdings and Poonawalla FinCorp, and J&K Bank and Central Bank of India, but not such a big day. There's Lotus, and we'll talk to the management on Monday, I'm sure, or Tejas Networks, which keeps on bagging these orders, but nothing really heavyweight. JSW Steel in its own right as well, the largest metal company, but from an index weightage perspective, not the heaviest weight. So today is okay, but tomorrow there's ICICI Bank, there is Kotak Bank, so two heavyweights in the banking space, and then a clutch of other banks. There's IDBI, yes, RBL Bank. So it's a big day for banking results tomorrow, and therefore I suspect that after a start of whatever the start is, we might actually have a flattish move in the banks. Uh, but it's all about consumption on open today. Today is a big day from an open market, open perspective, and uh, just the fact that there is so much of talk about FMCG, right? The last few days, ITC, HUL, Nestle, UBBL. Uh, Nestle maybe stood out on performance, healthy top line growth, etc. UBBL saw recovery in volumes, but HUL was weak. ITC was largely in line with estimates, and therefore I say that there isn't too much out there in terms of earnings growth, if you will. So systematics note on ITC sums up the earnings very well. They have a buy and a target price of 515. They say that the top line beat has been offset by a soft margin performance. Better than expected cigarette volumes have driven the top line growth, and some other factors drove the top line growth. But margins might be lower in cigarettes, and there is severe margin pressure in the paper business, which might impact margins going ahead. However, for the stock, strong cash generation and a solid dividend yield could continue to provide some downside support. So that's the view on ITC, and which is why even if it starts lower, who knows, it might just stay stable. But on HUL, most people have said that the numbers were left a bit to be desired. So that is the problem with Hindustan Unilever. I haven't quite given the numbers per se, but the numbers seem that there was some issues out there for HUL. The other set of numbers that I have, and I'll come to Emphasis in a bit. The other one is United Breweries. Now look at the numbers optically. Revenue is up 14%, but the operating profit margins came off quite rapidly in trade, or rather in the quarter, and therefore that is the problem. Now relative to expectations though, and the PAT is down 20%, but relative to expectations. Now, here's the other analysis, right, for UPBA, that the volume growth numbers was 7%, which was the highest in the last 4 quarters, which is maybe a small positive. So let's wait and watch. I know there are lots of notes floating around which say that the EBITDA margin is much better than estimated, but I think per se the quarter, to my mind, looks weak. However, yesterday I thought that Atelier Mindtree was slightly wobbly as well, but on the con call, because the guidance that they'd given was strong, the stock ended up 5% higher. Similarly, you could see this happening with UVL as well. And then the quarter looks weak, but the volume growth numbers were very strong, and maybe the stock does something completely different. Then the other one is Voltas. Revenues were up 29%, but the operating profit margin at 3%. And that, uh, you know, I mean, quite something really. A large bit losses in the electromechanical projects and the EMP segment for Voltas. The PAT at 35 crores versus a loss of 6 crores is separate, but the provisions were taken, so on and so forth. So all of that is the issue for Voltas. So I would classify this as the EMP segment issue coming to haunt Voltas in the quarter, and therefore looking wobbly. Tata Communications is the other one which looked slightly wobbly to my mind. Revenue is up 2%, but the EBIT was down 7%. Margins at 8.42 versus 9.31%. PAT down 42% at 221 versus 381 crores. So I think left a bit to be desired. Tata Coffee revenues down 3%, but the margins expanded. The PAT is down 56% because there was an exceptional gain of 136 crores in the previous corresponding quarter. Strip off this 136 crores from this number, and even the PAT number will look very good. I would classify these as decent set of numbers, and maybe the stock does well. Now, what I haven't given viewers are the numbers of Emphasis. You will hear the management today. The problem with Emphasis is that very flat quarter, the deal wins saw a sharp fall. And you know that Emphasis contends with the dual problem of BFSI as well as banks and mortgage, both of which are looking very weak in the US. And therefore, there could be a problem for Emphasis. So do keep a keen eye out for this. I reckon that stock should have a fall today. So we'll keep this one in mind. So watch out for Emphasis as a weak stock in the session today. Now, steady numbers from some of the other names as well, and I'll get to them. So I spoke about Tata Coffee, which is one. Equitas, Signed, yes, Signed was the other important one. Very strong set of numbers there. Revenues up 5.45%. For an IT company to do this is very commendable. EBIT margins steady. PAT numbers 8.57% higher for Signed, and that is actually a really good performance considering what some of the others have done. So I was very impressed with what Signed has done in the quarter. The guidance was very good as well. The management is confident of achieving the margin guidance of 150 basis points to 250 basis points. It is seeing some slowdown in decision making, but it's said that once a contract is signed, it gets executed faster without any hindrances. Kotak Institutional Equities has increased the price target on Signed to 2,000 rupees. So do watch out for that. What else? There is Hatsun Agro, I think, which came out with a good set of numbers. I thought revenues up 9%, margins expanded slightly, PAT up 82%. And by the way, I checked the numbers myself. There are no one-offs or anomalies here. I think it just put up a good, solid performance, and therefore you might well see it do okay. So watch out for this one as well. One set of numbers which has dichotomy is Havells. If we can pull up Havells here, revenues were up 6%, which to my mind, considering its standards, are weak. Operating profit margin at 9.57 versus 7.79, and the PAT up 33%. So optically, this looked very okay. The only problem is that EBITDA missed estimates. The management has cited softness in the consumer demand while adding that the outlook for the upcoming festive season is positive, but the ECD segment particularly weak for Havells as well, and that is a problem. The electrical consumer durable segment was particularly weak. 5% YOY decline in revenues. Lighting and fixtures revenues also fell marginally. Looking at the uh, numbers and the valuations that Havells trades at, it is a problem. Keep in mind the wire segment as well. Polycab did really well, but Havells couldn't. So therein lies the problem. Now, very quickly, some stocks beyond numbers. Zomato, SVF growth is doing a block deal today, 93.6 million shares, floor price of 109 to 111. Don't think there's too much of a discount there. If it gets absorbed, I reckon it could actually do very well. So do watch out for 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 this one. Do watch out for PTC India's approved ONGC's bid to buy unit PTC Energy for 925 crores. Grasim has gotten 141 crores demand notice from Rajasthan stamps collector, so that could be in focus. And a couple of pharma companies, Indoco and Natco, could be in focus. USFDA inspections for Indoco, 4 observations, for Natco, 8 observations. So both of these could be something to watch out for. So murky markets globally, looking very weak. Oil prices higher, yields higher. I think people need to be uh, focused that it's a bit of a risk-off mode currently, and people should be very, very careful for what's happening. I'm just trying to see if I've missed something else. Uh, no, not too much. Like I said, um, a few stocks have done okay. Jefferies has downgraded IGL, and CLS has upgraded Ultratech to an outperform rating. So maybe some of those stocks could be in focus. A clutch of management conversations today on BQ Prime. So firstly, talking point today is at 10:15. Note that, not at 10. Amit Sachdeva of HSBC Securities. He's come out with a note just this morning. We're lovely to talk to him. So do tune in for that conversation if you can. What else? Emphasis, like I said, a slightly wobbly quarter. Manish Tukkar and Nitin Rakesh joining to talk about that. 10:35, we'll hear from Anil Rai Gupta, Chairman and MD of Havells. So that is an important conversation considering the quarter that they put in. 11 a.m., Mastec Johnson. Metro Brands at an EFI quarter, 12:30 p.m., that conversation. And Cyient, of course, which is the strongest quarter to my mind from all the IT companies thus far released today. So Karthik Natarajan, ED and CEO of Cyient Johnson at 12 p.m. So do try and tune in for that as well. Thanks so much for tuning into the Trade Setup. Have a great day ahead.